So we'll start. I'll give a brief intro to everybody. Good morning, everyone. It's a great pleasure to have you all here for the first edition of our annual conference, and we are very ambitious about our theme today: Digital India, Policy, Society, and Governance. So it is. This theme is amply relevant for today's times, and given how much, even as a B school, we talk about technology, we talk about technology in businesses, we talk about technology in governance. So we thought it would be right to truly understand the implications of how a technology would underplay in a digital India and a digital economy. So we have with us as our keynote speaker, and we are very fortunate to have him with us, Santosh Mehrotra is a human development economist with the research in health, nutrition, sanitation, and education. He's also the visiting professor of University of Bath and adjunct faculty at the Public Health Foundation of India. After an MA in Econ from the New School of Social Science Research, New York, and PhD from Cambridge, Professor Santosh has spent 15 years with the UN in research positions, heading UNICEF's Global Research Program on Social Policy for Developing Countries at the Innocenti Research Center, Florence, and as Chief Economist of the Global Human Development Report, New York. He returned to India to head the Rural Development Division and Development Policy Division of Planning Commission, and was the lead author of several chapters of the 11th and 12th five-year plans of India. He was also Director General of the National Institute of Labor Economics Research Planning Commission in the rank of Secretary to the Government of India. He advises the current NITI, the Ministry of Labor, and the Ministry of Skill Development. His work has been translated into Hindi, Spanish, French, Russian, German, and Portuguese. He published 13 books, including 3 with Cambridge University Press and 4 with Oxford University Press. Sir, welcome. And we are very fortunate to have with us Professor Pulapre Balakrishnan. He's a senior fellow with IIM Kozhikode, and he's one of our very own. And he'll be offering his comments at the end of, he's a discussant to your keynote, and he'll be offering his comments at the end of your keynote. And to give a short intro of him, his published work spans the inflationary process in the Indian economy, productivity growth in manufacturing, the macroeconomics of the transition to a market economy in Ukraine, agricultural involution in Kerala, and economic growth in India. He has served as a country economist for Ukraine at the World Bank and has been a consultant to the International Labour Organization, the Reserve Bank of India, and the United Nations Development Program. Welcome, sir, Pulapre, sir. And Santosh, sir, the floor is all yours.
Thank you very much indeed.
Sir, you're on mute.
I'm not on mute. I'm unmuted. You can't hear me?
Yes, sir, you are audible.
Yeah, but I can't share screen. I need to host a disabled participant screen sharing. Can you please enable screen sharing? I have a presentation.
It's enabled, sir.
Well, Zoom is giving me a message saying, oh, okay, now it's just. Thank you. Very good. Okay, can you see this? Can you see my screen?
Yes, sir.
Very good.
We can see your
Thank
screen.
you. Super, super. So let me go to slideshow. Right. Okay. Well, thank you very much indeed for inviting me. And it's a big job to discuss Digital India, you know, in terms of governance, as well as so many other themes that you want me to talk about. I'm actually going to focus my attention for most of my time on this question. Can India become an innovative society? And I believe there are plenty of challenges before India becomes an innovative society, and I'll be speaking about those. And then I will, at the end, actually go on to talk about the governance challenges, but very briefly. So let me start right away. And the structure of my presentation is as follows. I'm going to be focusing very much on the Industrial Revolution 4 and its possible impacts and what evidence we've seen from surveys of companies that have actually adopted these technologies. But let me begin with my sort of final conclusion already, by telling you that India requires a national innovation system, and for success in the area of science, technology, and innovation, without a national innovation system, no country has actually managed to transform itself. The ultimate objective is structural transformation, and for that, we need a national innovation system. So I'll begin by talking about IR4 and its impacts on jobs in India, and specifically speak about a survey which shows the impacts of the use of IR4 industrial machinery, and then go on to talk briefly about digital tools in specific. I mean, then I'll sort of really, in the latter half of my presentation, spend time talking about the challenges that India faces in implementing what Joseph Stiglitz, the Nobel Prize winning economist, calls a learning society. The challenges that India faces in creating a national innovation system, which are three challenges, but I also offer solutions there. So the first challenge is the absence of an industrial policy. The second challenge is, the poor educational outcomes of our current workforce. And the third challenge that I'll deal with is the underfunded R&D system that has no way to convert patents into commercially viable technological solutions. So let me start with, IR4 and what implications it might have for jobs. I'm sure all of you have been told repeatedly, oh, how will we generate enough jobs for India if IR4 technologies take over? Well, what does a 700 companies survey conducted by the ORF about 2 years ago tell us? I'll come to that in a second. But let's just start conceptually by asking ourselves what might be 4 possibilities in respect of jobs if companies were to introduce IR4 technologies. Well, one, many of these technologies will require new jobs. Second, some jobs will be threatened. Third, well, there'll be new jobs which will require new skills. So people in existing jobs may require new skills. That's the third form of impact on jobs. And then, of course, there'll be some jobs, many jobs, in fact, which will remain unchanged. Now, what has been the experience with past industrial revolutions? Why are we calling this IR4? Because there have been 3 past industrial revolutions. Well, but what is the experience with the last 3 industrial revolutions? The first one of the 18th century, which spread in Europe through much of the 19th century. The second one, which was related to the emergence of the conveyor belt and a mass production system. In other words, taking the innovation of the factory system of the first industrial revolution to scale. And third, we've had, of course, in the 20th century, from after the Second World War, the digital revolution. Now we have these IR4 technologies. What has been the experience in respect of the impact on jobs? Well, of these past 3, well, they've obviously destroyed jobs, many of them which existed before those revolutions, but they generated many more jobs. They generated productivity enhancement, which led to increases in incomes. Simultaneously, the workforce grew. The workforce grew and grew and grew, and yet most people, through those 3 revolutions, found jobs. So the experience, broadly speaking, with those 3 revolutions was that they generated more jobs than they destroyed. And it's highly likely that this is likely to be the experience even with IR4, although one has to be a little bit more careful in saying this because the technologies are changing very rapidly. However, the real issue is whether companies, especially in India, will actually introduce these technologies or not. So let's look at what the experience has been. Well, survey of 770 enterprises in 4 sectors: garments, banking, financial services and insurance, BFSI, logistics and retail, tell us something about the adoption of these new technologies. Now, it's interesting that a summary result from this survey shows that nearly twice as many companies needed to increase staff on introducing new technology, machinery, or digital tools in the last 5 years as those that saw reductions. And I want to emphasize that a World Bank report, I think a report of about 2 or 3 years ago reported something very similar over the 21st century, over a 20-year period for Europe, that they had that more jobs had been generated than in fact had been threatened or had been lost. So in other words, this survey is telling us that something very similar is seemingly happening in our country. Let me move on. What is the state of the adoption of IR technologies, IR4 technologies in our country? Let's look at the use of the Internet of Things, of IoT, in the 700 companies that we saw. The use of IoT for all the firms, the 700 which were surveyed, 40%, the first bar, give me a second, the first bar here, saying 40% had actually adopted Internet of Things, which is a fairly high rate of adoption, because we are sort of in the early phases, really. Among BFSI, it was 51, in transportation and logistics it was 48, textiles is 33, in retail is 28%. Now, clearly, there are these different sectors or industries have different business models, varying, and therefore there is a varying adoption of IR4. And you can see that these are sort of going a little bit further beyond IoT. This is looking at big data, at computer-aided design, augmented reality, and blockchain. And you can see that big data's use in the BFSI sector is 27% of firms are using big data here. In the logistics and in the retail sectors, the use is much smaller. But again, you can see that big data's use everywhere is smaller than that in BFSI. What about logistics? Well, you can see that in the case of all these technologies, whether it's CAD, augmented reality, or blockchain, it's relatively much smaller. So clearly, business models differ because the nature of the industry varies itself. So you're going to see enormous variation in the extent of adoption of these technologies, which is not surprising. I will go into some reasons later. When the question was asked, these questions were about what technologies have you already adopted? But what about the future? When the question was asked, future adoption of industrial technologies and machinery in the next 5 years, what did they say? Well, 64% companies said it's likely or very likely that they will adopt aspects of IoT. In fact, 52% of companies said they'll introduce big data analytics, 54% will adopt new materials in their businesses. Primary among them are textile companies, which is quite significant. I mean, yes, textiles is a relatively labor-intensive activity, supposedly, but still, half of them are adopting this technology. But it's unlikely that there are many firms which said it's unlikely or very unlikely. 53% of the surveyed companies are unlikely they will adopt production or stationary robots. So in other words, again, emphasizing the point that there's massive variation among companies. I should emphasize here that robots' use is confined to by and large, even in Europe, North America, and Japan, to which firms? To automobile sector. It's rather limited outside of the automobile sector and confined to the electronics manufacturing sector. But other than these two sectors, which account for nearly 75% of use of robots, you don't see many other enterprises or many other industries in which robots are being used. You saw that I mentioned that IoT and big data analytics is relatively popular. Well, what's driving it? Well, the drivers of industrial adoption of IoT include the declining costs of sensors, the rise of cloud computing, and increasingly connected consumers themselves. IoT is therefore set to impact various industries from automotive to transportation logistics, agriculture, retail to health industries. Big data analytics, well, it's expected to be important for businesses in the next 5 years, especially for collection, storage, management, and analysis of massive information, which provides multiple applications to improve quality and to innovate. When the question was asked of these firms about what were the reasons for introducing new technology? Well, it's interesting that contrary to concern about the future of work, just 28% said in order to reduce labor. And 39% of companies in the last 5 years said they wanted to improve quality of output. That was a much more important reason than reducing labor costs. In other words, clearly we are again getting the sense that labor will be impacted, but not to the extent that is constantly in lay public dialogue and narrative talked about. Look at the other reasons for the adoption of new technologies that the companies mentioned. They want to expand into new markets. They want to maintain market position. Technology adoption is taking place among users. Therefore, they want to follow suit. And then there's adoption among competitors. Therefore, that's the reason they want to do it. There still remain several barriers to technological adoption. So what are they? Well, while adoption of industrial technologies and machinery holds potential benefits for companies and customers, 67% of the firms reported facing barriers to adoption, including shortage of investment capital. This is particularly the case in our country, but not just in our country. 24% of companies said that they face financial barriers. And part of the reason, of course, is that labor costs are relatively low. So they would prefer to use labor rather than, borrow heavily to adopt expensive technology. Additional problem, lack of needed skills among the workforce, a subject I will come back to. Then they said lack of labor market flexibility. And then finally, there was among many companies insufficient understanding of opportunities to use industrial technology and machinery. Let's turn now from IR4 to digital tools. What are the reasons for having introduced digital tools and services in these same companies? So the companies that introduced digital tools, they gave these answers. This percentage gave these answers as the drivers: to attract new customers, to comply with government regulations, to improve quality of output, and then some said to reduce labor costs. What about the use of these other digital tools, like submitting your tax digitally or submitting your GST return digitally? So when the question was asked about what about the future adoption of digital tools, like in the last case for the IR4 technologies, what about future adoption? Here, of the 59% of companies not using digital tax or GST, they plan to introduce it. In the case of those not using digital tax or GST, 67% were planning to use it. And for those not using digital wallets and internet banking today, about 75% said that they plan to use it. In other words, as compared to IR4 technologies, clearly there's much greater likelihood of the adoption of digital tools rather than necessarily IR4 technologies. Why is this the case? Well, one reason, of course, is that online marketplace is an opportunity, and there's increasing internet access driven in part by declining cost of mobile phones and by improvements in digital infrastructure, and which has led to, of course, the proliferation of online marketplaces. And we all know that e-commerce is supported by big data, social networks, and cloud computing, which is also transforming cross-border trade in merchandise and services. So of the companies which were using these tools, while 29% of firms participate in e-commerce, there were 61% of firms who said that they are likely or very likely to do so in the next 5 years. So in other words, the use of digital tools expansion is much more likely and much likely to be much more rapid than the use of IR4 technologies. And then, of course, the great advantage is that global markets for India's micro, small, and medium enterprises are opening up. And we've already seen how online platforms such as Flipkart and Amazon are being used by even small firms, because they are able to access consumers around the world. So in summary, very briefly, what is the survey telling us? More than twice as many companies report having needed to hire additional workers due to adoption of industrial technologies and machinery than those needed to reduce their number of workers. Similarly, adoption of digital tools and services in the last 5 years has led to a need for additional workers. And then 33% of companies report needing workers with new skills due to the technological adoption. And companies also plan to address these skill gaps themselves by retraining existing workers and also having workers learn on the job. Now let me turn to the second part of my presentation, which I want to briefly present to you what I believe are the challenges for Indian industry and India to become a major innovative center and a major industrial or manufacturing country. Because what I've presented you is simply a survey of 700 organized sector firms in 4 sectors. But the larger context of our economy is much more challenging, and and you will begin to appreciate this from this very first slide. I'm going to present three challenges briefly before I close by talking about governance issues. Economic reforms began in 1991, but it would interest many of you to know that manufacturing share of GDP then was 17%. 3 years ago, it was still 17%. In other words, manufacturing has not been a lead sector in our economy. Tragedy is that despite the so-called Make in India, much touted program, the share of manufacturing in GDP has fallen to 15%. And the share of manufacturing employment in our economy has never risen above 12.5%. And this is just to compare with our neighbor Bangladesh. Manufacturing share of employment there is 16%. That gives you an order of magnitude how weak our manufacturing sector is. And unfortunately, manufacturing has not been a leading sector in the economy. In other words, it has not grown faster than the economy as a whole, and therefore has not led the growth of the economy. What has led the growth of the economy is the services sector. I'm sure Bala will speak about that since he's written about this subject. We had several industrial policies before 1980, but unfortunately, they never utilized India's most abundant factor of production, which is labor, a subject I'll come back to in a minute. Since 1991, in 1991, we got an industrial policy statement. But in that statement of industrial policy, the government assumed that the opening the economy, liberalizing, delicensing industry would alone lead to manufacturing become a lead sector driving growth. Well, it did not. Only 20 years later, we got a national manufacturing policy and only in 2012, when our market was completely inundated with imported computers, imported phones, and imported electronics, we got an electronics design and manufacturing development policy. Too little, too late. And this government, of course, has not, then the government changed. This government has not even announced an industrial policy. By contrast, and I need you to understand this, why do many of you end up working in Singapore? Of course, you do that because you like working in the finance sector, a subject we might talk about later. Despite the fact that many of you engineers, what the hell are you doing in finance if you're actually engineers? But the real issue is, by contrast to India, East and Southeast Asian countries had both an industrial policy and an education skills policy, which was aligned to industrial policy. So here is India, which is seeing the onslaught of digital tools as well as in IR4 technologies, but it is doing it in the absence of an industrial policy. And it is doing it simultaneously in the absence of an education and skills policy, which could be aligned to an industrial policy, which is the exact opposite of what the East and Southeast Asians managed to do. So what we need is an industrial policy for manufacturing to enable technological innovation to thrive. And I'm not going to go into the details of this, although I've written about this. There are 4, 5 or 6 components of an industrial strategy that I could have talked about, but I'm going to focus on this last bullet, creating a design and innovation institutional system, which is an integral part of an industrial policy. Industrial policy needs a technology development policy, which essentially means a design ecosystem. Design labs that can contribute to create a digital ecosystem in the economy and governance. Design labs design quality products, carry out digitization, connect electronic systems. They innovate for automation, which are all needed if India is to move towards adapting and developing industrial revolution 4 technologies. Let me just very quickly tell you what the challenges are in doing this. One, weaknesses in education and vocational and technical education of our workforce. For science, technology, and innovation to permeate and lead to inclusive growth, the educational level of our workforce will have to improve. You'll be shocked to know that in the manufacturing sector alone, in 2015-16, 38% of our manufacturing workforce had primary or less education. An additional 19% had 8 years education, 32% had secondary or higher secondary education. Only 10% were graduates or more. So if one of you joins the manufacturing industry, you'll be part of that 10%. And by the way, of the entire workforce in manufacturing, only 10% had formal or informal vet in manufacturing. And things are not much different in services. I'm going to sort of, in view of the time, going to move on very quickly. So education and skills base now in the last few years has been established. Now the science, technology, and innovation related actions are very much needed, which is my challenge 3 or like term 2. But let me demonstrate to you how an education and skills base, to some extent, to a significant extent, has been established. We've now finally in 2015 reached 85% secondary enrollment. And in higher education, we've reached 26% higher education, although the quality of all this is very, very poor, because the massification of higher education within the last 10 to 15 years has meant that learning levels are still low. And even at the secondary levels, there are serious shortages of science, technology, engineering, and math teachers, STEM teachers. And if you don't have STEM teachers at the secondary level, how are you going to train the workers who are supposed to be using IR4 technologies or using digital tools. Because 53% of our enrollment in tertiary education is in social sciences, humanities, law, business, while engineering, manufacturing, and science is much lower, of which pure science is only 5%. So what we need is much greater investment in education. 4% of GDP of public expenditure just won't suffice. And we need structural shifts to align industrial policy to education skills policy for innovation to thrive. Let me quickly turn to the third challenge, after which I'll quickly close. What's also required for a national innovation system to emerge is translating ideas into solutions. What do I mean by that? Well, that's what I'm spelling out in this slide. India spends only 0.82% on R&D, but there has been impressive growth in scientific publications. We are 5th in the world. And in patents filed, we are 6th in the world. That's pretty impressive, given how little we spend, 0.82 on R&D, when China spends 2.5% and Korea spends 4%. The point is, simply increasing R&D expenditure will not help society become a learning society, because the challenge is to transform these patents and these scientific publications mentioned in the previous bullet into technologies which are commercially attractive, which provide solutions through entrepreneurship. Can you imagine the steps that we have to go through for this learning society that Stiglitz talks about to become a universal and profound and deep phenomenon in our country? What is the quality of our research? 90% of our proposals don't even clear initial peer review evaluations because they lack novelty and they lack translational skills. In the interest of time, I'm going to sort of move on from here very quickly and essentially tell you what the state of affairs is currently. What are the challenges here? And this is my last slide, and then I will turn to the issues of governance very briefly before I close. You see, institutions, what do we need to do if we want to convert research into actual innovations, translational innovations on the ground? Institutions today face resource constraints to procure and maintain mega facilities and advanced instruments for analytics. These should be made available by government-supported startup companies located in a cluster of research institutions and managed by trained scientists. Scientists will have to wean themselves away from the dependence on publications to pick up scientific questions and instead think of research problems that have local relevance. This is a genuine and a real problem. Scientists today in our CSIR system think that if they pick up a research question which comes up from an international publication and then publish a new paper or come up even with a patent based on that, their bio has been enhanced. They might get a postdoc abroad, but what does it mean for me, for the ordinary poor person in our country? How good is the use of my taxpayer rupees being put to by the CSIR if all that they are getting is publications and patents, as opposed to solutions to problems that our people face? Let me close my slide system here, but let me just say in closing, given this scenario, it's absolutely critical that we understand what is the real state of Bharat, as opposed to the digital India you want me to speak about when it comes to digitization. And I'm going to take some very relevant contemporary examples. COVID lockdown, what did it expose? It exposed a massive digital divide because only 8% of India's children had access to online classes. Yes, you heard me right. 8% of India's children. You people must have been among those who had access to online classes. What about the remaining 92%? You know that government schools have been all closed for 18 months. Can you imagine the learning losses on top of what I have described to you, the poor level of learning of existing systems? This could have been avoided. How it could have been avoided, I don't have the time to mention. I'll give you yet another example. I've given you an example from an education system. Let me give you an example from our laboring poor. This government came up with a social security code 2020 to provide so-called social insurance for 91% of our workers who are informal. By the way, you people are about to join the companies which will all provide you with social security. 91% of our workforce does not have that. The government came up with a social security code in 2020. And along with that, it came up with an e-Shram portal, part of Digital India. It is supposed to register migrant workers and workers for the social security code. But what share of our unorganized sector workers even own a smartphone? How are they going to access this e-Shram portal where they are supposed to register if they are even going to be able to get information about this social security or get any of the benefits that as migrant workers they are supposed to get? Because only 400 million of the 1 billion users of phones have smartphones. So there is a massive digital divide there itself. Okay, forget about Bharat. Let's just come back to India for a second. Within the India that you and I operate in, within the India that IIM operates in, we all know about the GST system. I was speaking about that. A very good thing that we now have a national goods and services tax. Many of the companies that we looked at in the survey actually talk about entering GST. It's a digital tool. But believe it or not, I personally know people who, despite the fact that entire GST system from the point of view of a company or a user is digitized, or your filing is supposed to be digitized, you will not get your refund until you pay speed money. I personally know people who have had to pay lakhs in order to get 75 lakhs worth of their refund from GST. The system on which you want to, through which you want to govern, is rotten to the core. Until you fix those parts of the system, just digitizing India is not going to solve your problem. Thank you very much.
Thank you, sir. That was really very insightful. I now request Professor Pulapre Balakrishnan, sir, to offer his comments. Sir.
Okay, Ashish, can you hear me now?
Yes, sir, we can hear you now.
Okay, great. Santosh, thank you very much. Sorry to remain out of your sight. There's a problem with my, my camera, it seems, which I didn't realize till this morning. Thanks very much for, hugely informative presentation. May I ask you a question purely from our education? Santosh, I'm sorry I missed this at the beginning. Will you please clarify for me the distinction between IR4 and digital technologies? I missed that.
Yeah, well, IR4, we are talking about machine learning, big data analytics,
I see.
3D printing, robotics.
I see.
Digital, I think I sort of gave examples of the digital. Digital is much more universal. You and I use digital all the time.
Right. I see.
Internet banking.
I see.
You know, filing of our tax return on.
Right.
You know.
Yeah. Okay, great. That was helpful. So look, I think the issue here in general, not so much what Santosh spoke about, which I'll come to, is basically about whether digital technology and IR4 technologies will assist innovation. That is absolutely an important question. And I don't think there's a doubt about that. That could, in principle, assist innovation. Note the expression that I'm using, assist, whether it's spur it is a different matter. And we will come to that in a minute. So it will assist innovation without doubt, but how widespread this innovation will be in the Indian economy due to I4 and digital technology, I don't know. Clearly, tech firms and including the online marketing companies, etc., will use it in a big way and will innovate as far as their processes are concerned. Whether digital will actually lead to innovation across the economy, I don't know, for reasons that I will come to. This has nothing to do with what Santosh said. This, I think, is a general question that arises in the context of the workshop. Now, a very brief comment on some of the things that Santosh touched upon. He's absolutely right. The issue is really about the net effect on jobs of IR4 and digital technologies, or the adoption of these technologies. And he's right. It is going to be the net effect. And he's looked at historical examples. And I think historical examples or history itself is extremely important for us. And we're right to do that. But I just wish to say that the historical experience that we have seems to be largely from the experience of the West in certain, for want of a better word, epochs. And I'll come to that in a minute. Let me look at the more easy one, which is post-war Europe. Yes, there was net creation of jobs. How much of a industrial revolution happened at that time, I don't know, but technology did advance. But the fact was this was an exceptional period in terms of post-war reconstruction, et cetera, et cetera. The economy boomed. And so there were other impacts on employment other than purely the impact of new technologies. Now, the specific example that Santosh looked at is the first industrial revolution. And again, we're right to look at it. Here, I just want to say that it is not obvious that the impact of technology was the same on the European economies and the economies which were colonized, notably India. Now, while deindustrialization might be a bit of an extreme characterization, nothing like the growth of employment that happened in Western Europe happened in India in the 19th and even early 20th century. So I'm not sure whether how much we can learn from history, but we can learn something from history without a doubt. Now, I just want to say that there is no a priori reason why digital technologies or even machinery should displace labor. But what is important is that the profits of those who are employing these new technologies get respent in the economy in the form of investment. So now there's a larger issue here, right, which is not particular to IT, could also be particular to landlords, for instance. I use the word landlord. We don't really have landlords in India anymore, but in 19th century England you did, and that's an old question. If rents rise, what happens to the rest of the economy? If landlords don't invest it, they spend it on, conspicuous consumption, you will not have industrial growth. So something similar like that is at work here. Technology adoption increases the profits of these companies. Now, what will happen to overall employment in the economy will depend on how they use these profits. Now, if I go into this in a greater length, I'll kind of, be speculating, but I just want to say, so what will they do with those profits is also a function of how dynamic, for want of a better word, or how buoyant is a less loaded word, the Indian economy is, that these guys who are earning all these profits want to invest it in India or take it abroad. And I just want to point out to you that for a variety of reasons, high net worth Indians are going abroad, and there is also a slight outflow of domestic investment, right? So we need to think a little bit about that before we can be completely certain about what these increased profits are. But of course, Santosh will come back and say, well, this is not as relevant as far as the net effect is concerned, because in his survey, the firms are not shedding employment at all, right? In your survey of however they are not shedding employment. In fact, they have demand for more labor. Isn't that right, Santosh?
Well, no, some of them are shedding workers. It's not that none of them.
But your overall conclusion,
yes, yes.
Your overall conclusion, overall, even about the IT companies, is they're not shedding. Leave alone the net effect, which if one is optimistic, one could say it's right. So I'm just trying to say Santosh's survey seems to negate everything that I said, but I'm just trying to say theoretically it depends on what the net effect. It depends also on the state of the rest of the economy, what these IT companies will do with their profits, etc. But I just want to say here, Santosh, you need to do a slightly wider survey than of these kind of high-tech companies. So just for instance, the impact of, what can I say, communication software, etc., is also spread across the rest of the economy in the services sector, not just in the production sector, which you have really, or the tech sector, which is, let's just look at an example. Clearly, with a better word processing, we need less secretaries, right? And that is something which is spreading over the economy as a whole. So I don't know. We need to have more data to assess this. But you're right, and I think one of the nice thrusts in your paper is that we shouldn't really be taking a Luddite approach. You didn't use the word Luddite and oppose all of this. There is some scope for optimism. Right. So, okay. So let me move on now to the next part. Ashish, you should tell me how much time I have.
Maybe 5 minutes more, less than 5 minutes.
I don't think I need. Now, here in your second part, Santosh, I really enjoyed much of the presentation, and I agree with much of what you said. I just want to take off from there and say, one of the things that I've always felt is that while Indian companies are very good at adopting new processes, they don't seem to be very good in producing new products. And this is a general point about our IT sector. How many new products do they have? That doesn't mean that we shouldn't capitalize on our expertise and services. But I just want to point this. Innovation is happening in processes. It's not sufficiently happening, I think, in products. And here I think there's I just want to say, even before at the same time, though I've said it, even before thinking of new products, I think we should just be concerned with producing better quality products. Right? And that is what the whole post-1991 thing seems to have revealed to us. We, internally, yes, but at a global level, I'm not sure we have been able to produce even sufficiently better quality products to increase our competitiveness. So there's just this reduction in tariffs hasn't got translated into that. All right. Now, here I think there's a huge role for the education system, right? The education system in India should also be transformational in the sense of trying to bring about social transformations. I mean, given that we have experienced poverty, maybe even second generation Indians who are born into reasonable comfort are not sufficiently risk-taking. All this creativity in the West has gone with, if I might say so, leaving the family or leaving the security of the family, risking your arm, chancing your arm, doing creative things. That somehow I don't see in our top education institutions, which from the point of view of the government and society seems to be geared mainly to ensure that young people have secure employment rather than create new products or are innovative in general. Firstly, you have to be innovative in your own life, I think, before you really become innovative in your workplace. And finally, I want to say, Santosh made this excellent point about his third challenge. I rather like it. Research into innovation, and there's some terrific points there also about hidden new system, the whole, what's the right word, industrial research system in the country. He used the word CSR. Absolutely, yes. I mean, what is your local relevance? Why have we set up these very expensive at a time when we were poor, right? In the 1960s institutions. What are they doing for the country? It's a very serious point, and the economy is a very serious question. I just want to complete by saying challenge 3, the way Santosh put it, was research into innovation. I want to say that we also have a challenge from innovation, translate that into production processes or implementation, to use a somewhat hackneyed but an extremely relevant term, and which is important. And here I think the government probably has some role well beyond reducing the tariff rate, which is what the UPA was concerned with, or providing macroeconomic stability, what NDA 2 is concerned with. I think the whole ecosystem should actually encourage production. I am not entirely convinced that the inspection system is either good for the country or good for the industrialist. As Santosh gave the example from GST, I'm not sure how incorruptible the inspection system is. And I think there is a case for maybe looking at labor laws, not from the point of view of security of labor. The security of labor must absolutely be ensured. Labor must get a reasonable wage. There's absolutely no question about that, employment conditions. But I think exit should be looked at. And I think, therefore, even labor laws come under this whole thing called ecosystem that I'm talking about. The way the government or the state interacts with business, I think, is important. And that matters a lot for whether this innovation is actually implemented at the workplace, which is what really matters if things like having an innovative society, or the whole purpose of innovation is satisfied. So I'll stop there. Thank you very much, Santosh, and thank you very much, Ashish and Vishal and the rest of you for inviting me to hear Santosh and to make these brief comments. Thank you very much. Bye.
Thanks a lot, sir. It's been our pleasure. And thank you, Santosh, sir. It's really been a pleasure to host both of you. And with this, I would like to inform everybody else that we do have 3 very exciting panel discussions coming up, 1 today and 2 tomorrow. We have the panel and schedule sent to all of you, all of the participants. And we hope to see you there as well. And once again, thank you to all of you. Thanks for joining us today.
Thank you. Bye-bye.